So, since I had a lot of fucking requests on where to start, um, how you guys can start learning what trading is, day trading is, how to read it, what's going on, what are the terms I'm saying, this video is a start of the playlist of beginner level. This is literally for someone that's never seen a fucking chart before. Like, literally, if you have a Chrome tab open and you're starting out on a Chrome tab, this is the video for you. So, um, the first thing you're gonna want to do is open the charts, right? So we're gonna go to TradingView, and you're gonna go to TradingView.com. For me, I have it bookmarked. Once you do log in, bookmark this tab. This is gonna open. Yours will not look like this. I will leave my personal visual settings in the description. That way you can just copy and paste my template for the people that really want to use this. But yeah, TradingView's open. You might not have the ticker up, and what I mean by ticker is these are the symbols, right? So yours might not say CME right here. You might see a bunch of different ones. You might see like, let's see, you might see like these ones, NASDAQ, OMH, right? So I purchased the CME data, which is like live data. The one we're looking for is NQ1 exclamation point, and that's the continuous contract of NQ. Now that might not make sense right now. Don't really worry about it. It's not that important. The main important thing is that when you open NQ1 exclamation point, that you see this at the top right here, that it's selected. And right here you'll see it saying NASDAQ 100 E-mini futures. We're also going to open up a second one, and how you do that, you go to, I believe it's, where's the template, layout setup right here. You're going to go to the second one. You're going to open this. And on this right side, another one's going to pop up. You're going to click on this symbol on the top, the name, just how I did it right here in this one. Same thing as pressing the top here. You're going to open E-mini S&P 500 futures. So that's going to be ES1 exclamation point. So that's also the continuous contract of ES. So you're going to learn very soon that NQ and ES are two different things, but they definitely play a role when it comes to trying to trade one or the other. They're kind of intertwined when it comes to price. Like, let's say NQ is dumping, ES is most likely dumping. Or you might see a scenario where NQ is dumping and ES is kind of lagging behind and hasn't really fallen yet. So that could be a manipulation. That could be price is lagging. It's probably the weaker index. One's probably a stronger index, right? So all of this is probably not going to make sense. So I'm just going to get past that. You're going to look for ES1 exclamation point. Done. Right? So now you got both your charts open. And you actually might even be able to get all my templates. That'll just upload both of these charts just like this. I'm not sure what's going to pop up on your screen. Don't worry too much about indicators. I know a lot of like BS that people use for like indicators and like, oh, use this for one to make millions of dollars, whatever bullshit. Just literally worry about opening the charts because we have to familiarize yourself with what's going on, right? So what I want you to do is there's time frames. You're going to see this little plus sign. Sorry, not the plus sign. You're going to see the drop down arrow right here. You're going to favorite the 1 minute, the 3 minute, the 5 minute, the 15 minute, the 1 hour, the 4 hour. That is all the ones that I use. I don't use any other time frames. I don't use anything else. The 1 and 4 hour is for the daily bias. The 15 minutes for fair value gaps or rejection blocks. 5 minutes also for fair value gaps and rejection blocks. We're looking for a 3 minute OTE, and we're looking for 1 minute continuations. This, I will go over all of those. You just got to give me like some time to work with it. But for now, we're just going to focus on reading what a candlestick is, right? So let's go down to a 1 minute chart. Make sure you select it. So click off, click back onto the 1 minute. Make sure you're on the 1 minute. All right. So we see a candle open, right? This candle's been open for 10 seconds because we're on a 1 minute chart. They have 60 seconds per candle. So what is this saying, right? We have, let's just take this one right now for instance. This candle opened here, right? So you can see the open. If you look on the top left, I can't really move my mouse without it like really showing, but right here, the O means the opening price. The H means the high of the price of the candle. the L means the low, the C means the close. And then this is the percent change of what happened in that time increment, right? So on this candlestick right here, we opened at 2174, so 2174.50. That's the exact number, sorry. The highest this candle moved up in price was right here at 29,176. So that's right here, which is why there's a little tiny little wick right there at the top of this price. And then we see a close here because this is the end of the black bar. So for white bars, this is the opening price, the start of this white, and the close is always the top of the white. That's only for bullish candles, right? And then for black candles, for the sell side, the top of the solid is the opening, and the bottom of the closed candle right here, this little black line where it cuts off that black box, that is the close price. Now that you understand what a candlestick is, and they call them candlesticks because there's wicks. These wicks show where the price has moved down to. So we open here on this candle specifically. I'll scroll in on this just to make this easier. So I'm going to make this really, really simple. Boom. Really zoomed in. We see right here the price closes and we open here, right? So this candle opens. We pushed as high as here, right? So this is the 29,178.75. So this is the highest it went. It's still closed here though at 2174.25, but the lowest this candle had was 21.59. So what happened in this candle? We see bullish confirmation because we start selling off all the way down here, but yet we see bidders like buyers that want to support this level, so they're buying at this price, which makes the price go higher, right? So this is a bullish wick. Now what's the opposite of a bullish wick? You're going to see a really tall wick. So, I mean, this isn't really tall for the upside, but this is still long enough to kind of explain the example. So price went as high as here, but the sellers really enjoyed that price for a sell point. So they brought the price down back to where the close was, and we went as low as here. So once you start seeing top wicks forming, you're kind of seeing seller pressure. And when you're seeing the lower wicks being formed, which is on the underneath the candle, like right here, huge wick to the downside. You could honestly use this as a trade entry, but I would dive more deep into what I mean by, I wouldn't just take this specifically. There had to be other confluences. You start seeing some seller wicks here. So everything from the top candle is a seller wick, and everything from the bottom of the candle is a buyer wick. So this is a seller wick, right? But then we do close above, meaning that this price is accepting higher. When you want to look for confirmation of a candle, you're looking for the close. Where does the price finish at the end of the time frame? You're not looking for what the high was. You're looking for where is price being accepted at the end of this 1 minute, right? So let's watch this 1 minute right clip right now. So boom, we just closed. We're accepting price lower. This makes me believe that we'll probably venture a little bit lower because we did see a move higher. We see two selling wicks right here. I mean, this is very basic, like trading analogies and like analysis. I wouldn't trade all of this just based off of two seller wicks, and it looks kind of bearish from here, right? So this is kind of showing that this gap wants to get filled, but I'll explain what gaps and everything like that are first. But the main focus of this video specifically was to teach you candlesticks, how to open TradingView, and what time frames you need to be on, what they mean, and that ES and NQ are kind of like the same thing, but not really. They are not the same thing. They are, but they aren't. Like one's top 100 stocks, one's the top 500 stocks, right? So the top 100 stocks are obviously in the top 500, but not all of the 500 are in the 100, right? So hopefully this clears up a little bit of where to start, especially with candles and what they mean. If you have any questions, I will answer them below. But please watch the videos first before you just like ask a million questions, because I might have solved your question in a later video. And that's why I'm making these videos. So that way, if you guys do have questions, you can just rewatch instead of DMing me all day, because I get hundreds, and I mean hundreds of DMs daily for who needs help for trading. It is insane. I'm trying to help everyone, but I can't sit here and text people all day. I just can't. It's not a waste of time, right? Because I want to help people, but I can't do it, right? You guys have a life too, and I have a life too, right? So I can't sit here on my phone and just text people all day about trading as much as I'd love to, right? So yeah, hopefully these videos will answer questions, but if you do have a question and I don't answer it, feel free to shoot me a DM, leave it in the comment section, do whatever you need to do to try to contact me. I always try to read my DMs at least by the end of the day, so if I don't get back to you, maybe just send another message because I just probably didn't see it. But yeah, hopefully this fucking helps. Let's jump into the next one. The next one we can go over. What can we go over the next one? Maybe fair value gaps. Fair value gaps is a good starting point because that's a good basis of like understanding what a gap is, right? All right. So let me end it here, and this will be for video 1.